Investors are buzzing about the major surge in IPOs so far this year. So for more insight on the bonanza, we're at the deal desk with our good friend Iyan Adewuya. He is a senior M&A analyst for Bloomberg. Iyan, good to see you this Friday morning. Let's talk about how many IPOs have priced so far this year, because it looks like it's been a pretty good season so far for investment bankers.
Yeah, and IPOs are in very good shape. That number is 575, which is pretty astounding. And if you look at the month-to-date number of just U.S. filings, we're at a 3-year high. We haven't had this many U.S. filings, if you look at the number of U.S. filings for the month of April, since about August of 2007. So we're really back to the highs here, and it's a combination of improving market environments together with past successful IPOs that are causing other companies that are in the pipeline to come out of their caves and file for IPOs.
Ian, one deal that we've been paying attention to a lot is China's Renren, and I'm just curious what you think this means for Facebook, what you think it means for other hot tech companies.
Well, I was talking to a colleague who said if you liked Renren, you will love Facebook. I mean, you look at Renren, and it looks like when you put the words China and social networking in the same sentence, investors just lose their minds. And, they want to invest in China, and they want exposure into social media networking. And so they were willing to ignore Renren's red flags, and they had accounting red flags. We don't even know the true number of users that they have. And they're based in China, so the government could shut down their business, the internet, at any time. But given that environment, if you take a look at Facebook, that's actually making money, that analysts say are at a clip to breach $2 billion in EBITDA this year. They're raising their ad prices per click over 40%. That leads you to start to see, with a frothy market, maybe valuations close to $100 billion. I'm not quite there yet, but we'll see. If you take the combination of Facebook's growing business in the internet advertising and the internet advertising market share that they're grabbing, together with frothy valuations for digital media companies, it's not a bridge too far.
So, Ian, if we're back to the 2007 frothiness in IPOs, what does this mean for the stock market?
Well, generally, the IPO markets are so fickle. And so I tend to discount actually what's happening with the IPO market.
So there's no direct relationship that you've ever seen?
Correct. And it tends to be, the IPO market tends to be a laggard, because what then happens is that as soon as there is any sign of weakness in the IPO markets, bankers are very willing to pull back, and companies as well are very willing to pull back from the market.
All right. Well, we know that private equity firms often look to the exit strategy. That's one of the reasons why they're involved with the IPOs. What has been their role so far this year?
Well, it's a pretty significant one, and the number for total private equity deal size for IPOs is $13 billion this year alone. If you look at the top 20 IPOs that have happened this year, a lot of them are private equity-backed companies. You mentioned names like HCA, you mentioned names like Nielsen, and so these are pretty significant names. So the contribution of private equity-backed companies within the IPO market is pretty significant, and that total deal size of $13 billion, that's about 20% of the total global deal size for priced IPOs. And when you look at what's upcoming as well, you start mentioning names like Dunkin' Brands, Toys R Us. It's a pretty significant
there's some household names that people will want to at least take a look at. Iyan, thank you very much. Iyan Adewuya joining us there from the deal desk.